Hi, everyone. My name is Deven Soni. I'm one of the executives at Polymath, which is a company that helps create and issue security tokens, which generally means tokens backed by assets, backed by equity, things like real estate, and to kind of really clarify and distill what we do, we really are building what we want to be kind of the on-ramp onto the security token universe, meaning if you're a company that wants to raise money using a security token, you would go to us. Actually, we would create the technology to create a token that represents the equity of your business, meaning million shares at $10 million valuation, Reg D offering, all those things. You can kind of compliantly code them into a token, and then you sell that token in a compliant fashion to a set of investors that you choose to. So that's Polymath in a nutshell. I'm sure we'll go deeper into it, but I live here in San Francisco. Polymath itself is based in Toronto, and I kind of head back and forth.
Great. My name is Benedict Chan. I am the CTO at BitGo. BitGo is a scalability and security company built for institutions. We've been around since 2013, and we do about 15% of the global Bitcoin volume on-chain. We've been historically known for creating multi-sig wallets back in the day, and starting security. And just last year, we received our trust charter from the South Dakota Division of Banking, which makes us the only qualified custodian specially built for digital assets. And we think that custodianship is really important in order to get digital assets in the hands of the mainstream, which is something that I'm very passionate about, and that's why I'm here today.
Thank you. Hello, everyone. My name is Joseph Chan, and indeed, I've got two hats on. If I put my academic hat on, I am the program leader for the business design and innovation in the University of Hong Kong. So basically what we do is that we are looking after different innovation adoptions. And also when we look at the digital economies, this is one of the key things that drive the business. That is what I have been doing for the research and my teaching in the university. But on the other hand, when I put my industry cap on, I'm also the CIO of a company called AlphaSlot. For AlphaSlot, we are doing and looking after the ecosystems of the entertainment. So that includes casino gaming and also social game. So we are building up our own chain. So it helps me to actually to bridge the industries and also of the universities. That is what I'm doing. Thank you.
Good morning, everyone. Is this on?
Yep.
Good morning, everyone. My name is Byun. I serve as CEO of OKCoin USA. We are open for business as of July 12th, so just several months here in the US, out of San Francisco. I am a really lucky guy. I got into the blockchain Bitcoin space in 2014, and that's where I met the founder and management of OKCoin. I've been with OKCoin for a little over 2 years now, and this is our entry to the US market formally. And so we're really excited to be here and take part in this panel as well.
Well, thank everybody for the panel. Sorry for the hiccup of the microphones. So my name is Henry. I'm the co-founder CEO of SesameOpen. We are building a middle layer protocol similar to 0x. The goal is long-term to power a fully decentralized economy, commerce economy. Personally, I feel very excited about moderating this panel because we have great lineup from speakers in each component of the whole value chain. From Deven from Polymath, which is focused on token creation, bring off-chain asset to on-chain. Then once you have tokens, you need the liquidity channels, which the team from OKCoin going to focus on talk about liquidity, the liquidity channels. Then we have a Ben from BitGo, we are provide services to bring the institutional investors to the whole ecosystem. Without those institutions' monies, you cannot create a very exciting market. Then also we have Joseph going to talk about market surveillance because of a background in his company focused on real world casino, which is very regulated market. And also from perspective of Hong Kong, which recently passed some laws regarding how to regulate the STO, security tokens. So without further ado, let's just jump into the first question. Please focus on, let's talk about STO. The STO has been hyped so much in the last, I would say, 3 to 6 months. I got like so many requests, people ask me opinion on what's my opinion on STO. Last time we had a hype, which is the 2017 ICO, we know how it ends. The market crashed. Not only crashed, there are a lot of scammers, speculators, which is crashed the whole market and hurt the real entrepreneurs who really want to build and develop great things. So I think we, collectively as a panelists, have the responsibility to deliver the right message to educate the audience what it is, what is not. So I would like to start questions, ask each panelist about three set of questions, but it's the same topic. The first is, what's your definition of a security token? Is this the regular D kind of type of model, which is no different than the traditional current VC model? We raise private money, it's SEC exempt, but you have a limitation, it can only sell to accredited investors, have a lockup period of 12 months, cannot exchange hand. So that's the first definition, what your security token is. The second is, what's the value for the asset issuers who want to issue the security token? And also, it's most important in why the investor should buy this security token. And the last part of the questions is probably very interesting is year 2019 would be the year for the STO? If it's yes, tell me why. If it's no, tell me what's the key factors blocking the industry moving forward, and what's the timeline you think the STO is ready for the prime time? Let's start with Tim then.
Sure. Please don't take this answer the wrong way, but it really doesn't matter what I think security is. I think what you need to do as an exchange and as parties of the ecosystem is to look at the local regulations of what a security is. We live in the beautiful state of California. We're in the US, and therefore you need to look at the SEC's definition of a security. And what they rely on heavily is the Howey test, which has 4 components. And so if it meets the Howey test, it is a security. And so we don't have any discretion on that. We need to conduct our due diligence and meet the test of the SEC's definition of security. And so in general, though, in terms of perspectives of the customers, obviously customers that are entering or purchasing or investing in security, they want a return. And so that's a primary element of the Howey test. Is there an expectation of return? And so I think that's where we see perhaps the stable coins are not securities, but other prior vintage ICOs as well as new STOs are securities. And so to me, it's pretty black and white there. That's the due diligence that we need to take. Finally, 2019, will it be the year of STOs? I know there's been tremendous effort out there by you folks in preparing for STOs, so I think we will definitely see STOs. I think yesterday's shares post had a great achievement milestone. Whether it's going to be a banner year, I really think it depends on the nature of the inherent security. If you back traditional real estate, I don't know, third end market down the street here, is that property exciting or not? I don't know. I think we do see a lot of exciting assets even in our hometown right here in San Francisco, but it really depends on the project or inherent asset. And so I would love to see some very interesting projects out there in the form of a STO or otherwise.
Awesome. Joseph?
Okay, thank you, Tim. And thank you, Henry. Sure. So when I'm looking at this topic, I also agree with Tim that it is hard for us to define what is securities because it really depends on the regulators and also on the market. And funny enough, I was in another panel a few months ago, and the panel is talking about asset securitizations. So it means that when we are looking at a blockchain, we are trying to look at different assets, how we can make into securities. So with the technology of blockchain, with the securities, basically this is happening. And this is where the digital economy is coming in so strong. So that is why when we are looking at the STO, for the definition part, I think for the coming 1 year, 2 years, people will start to look at their digital portfolio to see what exactly can be looked at as a value, and then to make something out of whether to make it token or not. And when we look at the history of the wish or short history of ICO, one thing that they are selling is more like the vision or the dream. And the key issue for there is that it's hard to do the valuations. And in the end, it is driven by speculations, I would say, too much. But when we are looking at STO now with the asset, with the securities, basically there is something that they can refer to for the investors. And of course, for the institutional investor, it is easier because they know how to do the due diligence. And that is why a lot of the regulators, when they are looking at the STO or on this initial stage, they will allow more on the institutional investor instead of the retail investors. So I think on this aspect, we are going to see more and more people looking at, as I say, the asset securitizations. So for 2019, I think it is still quite a good year because people have learned the lessons from ICO. Indeed, when I think about the ICO, and it starts with the traditional one, the conventional ICO, to later stage if the audience has heard about the reverse ICO. Reverse ICO means that they will start to have the adoptions, have the users, and then they build the infrastructures. In some way, it is already forming what STO is looking for to create the values. And of course, after the reverse ICO, there's the hybrid ICO that will have the adoptions, and also the infrastructures go hand in hand. So in some way, I think it already built a good backbone for it. So for the STO, I think it would be quite a way to go. Maybe the terminology, we are not going to call it STO, maybe a different term. But I think the direction is definitely going that.
Cool. Ben?
Well, I think that it's not that important to define the STO because the success of the ICO, whether it was a success or not, depending on how you define that, was not defined by whether people thought what the ICO was. They liked the ICOs because it provided them with an opportunity to, make some gains. And that, in my opinion, is why there was somewhat of a bull market in the ICO. I think that if you look at it by some definition, many of the ICOs were actually securities. In other words, they were STOs, just not done the right way. And so when some people think about STOs, perhaps what they're thinking about is, maybe we'll see another round of assets or tokens which are being sold, which this time are being sold officially as securities and in a regulatory compliant manner. And I think to some extent that is exciting because the underlying ability and technology of the blockchain, which is to make these tokens and assets available globally to anybody, and being very open and also without any counterparty risk, being trustless, is still a very big advantage over what we've seen in the past. So I think that that's very interesting to me. In terms of what are some of the blockers or some of the things that I think need to happen in order to have successful STOs, I think that I agree with Tim in that actually having the infrastructure there, and by this it means both the regulatory infrastructure as well as the market structure as well as the technology being built for great security tokens, rules to be created for the tokenization to be done, but also market structure in terms of, say, when you think about it, in the ICO market, what happens is when somebody wants to raise an ICO, they set up a website and they sell the tokens from the website. And that was how it was done. And if you look at traditional finance, how they do security raise is a lot different. Firstly, they do it maybe in partnership with an exchange. So they pick an exchange to go to. You don't see like Facebook listing on both the NASDAQ and the NYSE at once. They actually they go to an exchange. And you can see, I predict that maybe we'll see something similar like that with this next STO boom, in that mainly what people are looking at is they're going to see certain jurisdictions which provide promise of regulatory compliance. So places in Asia or maybe Gibraltar or Malta that say, okay, you know, we have a framework that you can be compliant in our country, and there's an exchange there that says, yeah, you know, you come to us and we'll help you with that. So I think there's a bit of market structure there. What's interesting in that is that in the traditional market structure, what happens is you have a broker, right? And they are a custodian. They're a custodian for your USD or your fiat. And then when you want to buy, they will take your money and get these securities for you from the corresponding exchange. And right now, that doesn't really exist in crypto. You don't go to, you know, a Coinbase or OKCoin and actually get your ICOs, all your ICOs there. And ICOs don't go to Coinbase to list. So I think that's a big difference. The other thing I think is that this time it's going to be different because you know, the market conditions we are in is also fairly different. So I think it's going to be interesting to watch. I'm not sure if there's really a hype, but it's something that I think in the long run provides a lot of value.
Yeah, thank you, Deven.
Sure. You know, I'll focus on the two middle questions that Henry asked. I think everyone did a great job defining a security and sort of the, you know, the 2019 and some of the bottlenecks. But you know, I'll just touch on why issuers may want to launch a security token and why investors may be interested. You know, on the issuer side, it's really interesting because we've spent a lot of time in this space, and I really can't even identify one you know, kind of downside to having you know, a tokenized form of equity versus the existing forms, which are typically kind of pieces of paper that are kind of shuffled around. You know, the biggest benefit to issuers is really opening up to a new investor base and doing so in a more simple way. You know, let's use an example of, you know, the Empire State Building, right? If there's a firm or an individual that owns the Empire State Building, you know, it's a, you know, multi-billion-dollar property. How many people can really buy the Empire State Building? Maybe it's, you know, a few hundred, and you kind of have to buy the whole thing, and you kind of have to create these complex legal structures. But what if you were able to kind of tokenize, you know, the Empire State Building, and now, you know, anyone that wants to own, you know, 0.1% of a piece of prime real estate in Manhattan can do so, and can trade those, you know, sort of more efficiently, trade those shares. And what happens when there's more liquidity in the market because there's more investors and more participants is that prices go up because there's less of a discount in the market. So that's kind of, you know, I think the biggest benefit to issuers. The other benefit to issuers beyond just you know, liquidity is really just the actual ability to enforce the regulations that are imposed by regulators. So when you look at some of the restrictions you have for a Reg D security, a Reg D offering, it's, you know, you have to make sure you sell to accredited investors. Those accredited investors can't transfer to other people. You can only have a certain number of investors in your company. Otherwise, the company may be forced to go public. You know, what happens to lots of large startups is that they accidentally get too many shareholders and are not forced to go public in a small window of time. So when you have a digital security or a programmable security, you can actually control a lot of those things in a technical way. So you can, only make sure you issue securities to a certain number of wallets. Make sure those wallets can't trade with each other. In a real-time fashion, identify who the holders of your equity are, like ask Apple today who their shareholders are. They have no freaking idea because they're held through brokers, and those brokers have intermediaries, and it's super complicated. Whereas with a tokenized security, you can generally tell very, very quickly, with almost immediately, who your owners are. So that's kind of one of the key benefits. When you talk about the benefits to investors, I think the real benefit is just access to more types of securities, right? The cost burden of having a liquid, publicly traded asset today is very, very high. It's, millions of dollars a year to trade to list a stock on NASDAQ, and the reporting costs are very high. Whereas, and also, if you're an individual investor and want to own, shares in Uber or Airbnb or, your neighbor's pizza shop, which is, probably a fringe case, but all those things you can do much more easily when you have a framework of liquidity and a framework around sort of tokens representing equity versus these like old dated pieces of paper and share ledgers. So I think those are some of the key benefits, and I'll stop there.
Okay, now that's actually a good segue for us to get to the next stage topic is we're going to get a nitty-gritty details of how the whole thing works. Deven, I would like to start with you with one simple question, then probably another trick question to see how he responds. And the first question is related to how the mechanism to bring off-chain asset to on-chain. I'll give you set up a little bit background here. So how many people heard about the so-called first STO being done by the Aspen Hotel? Okay, a couple of people doing that, right? So luckily, last year I met the founder of a quick blog, which is actually, he told me he did the Aspen Hotel from off-chain on-chain. And by the way, the Aspen Hotel is only Reg D offering, and I asked the detail is like, no, the token is only a ticket that's being traded on exchange. They have a clearinghouse who actually own the physical certificate of the asset. When you have the ticket, you eventually go back to the clearinghouse, they move the asset, technically the physical, just like a stock, move the asset that way. So for you, from Polymath's perspective, you're building a tool to enable that happening. And can you tell me a little bit of details how you actually bring this off-chain asset to make sure that the on-chain token match the off-chain asset? And how to do it in a scalable way? Let's assume we're going to have 1 million STOs in a year or two.
It's really interesting because, like, to take a step back and when you think about kind of like a big part of this like ICO boom that happened kind of mid 2016 to mid 2017. One of the reasons that happened was, obviously the advent of kind of ERC-20 and the ability to, create tokens very quickly that can be traded. But, I think the second and actually more important component of that was the standardization of the legal documentation associated with ICOs. A couple of law firms created these constructs called safe notes, which were sort of securities, sort of tokens. They kind of threaded the needle of securities laws at the time. And once that template got created, and once a couple of products started using that template, it became very easy to for other people to kind of follow that that path. And I think when you look at security tokens, things are very similar. Like so the question that Henry asks is a very good one, which is how do you tie a unit of real estate or the profits of a company to to be represented by a token? At the end of the day, these are all things that are constructs, right? Like a corporation or an LLC or it's like a construct that represents a stream of future cash flows or future equity. And those constructs are guided by legal documents, shareholder agreements, operating agreements, partnership agreements. So if those partnership agreements say that a token now is representative and equivalent to a share in a stream of profits, and we're going to enforce that based on our sort of board of directors, and that board of directors now represents reports to the state of California and the state of Delaware, then that you kind of have a chain of command that gives you enough comfort to be able to invest in the asset. So I think what a lot of people are doing is kind of creating a lot of these frameworks and templates that represent, that create the connections between the real world and kind of the tokenized world that then are up to the courts, and corporations and boards of directors to enforce. And what you're really going to see is that when push comes to shove and these enforcement actions actually happen and there's lawsuits and that's kind of when these things get improved. But today it's really you have in your shareholder agreement that you have shares, but you also have tokens that can represent shares and they're equivalent and interchangeable. But we'll see what happens over the next couple of years as some of these things when push comes to shove with some of these issues.
Great, thanks for the answer. Another trick questions. So we all know in the blockchain, there's a thing called a forking, and also the 59% attack. So let's say if you issue token on Ethereum, somebody fork Ethereum, now your asset being forked double the value, or how do you handle that?
Yeah,
Today?
well, I can take that one. So from a technical perspective, forks create two blockchains,
Yes.
a different chain, where you now have two different tokens. In the case of Ethereum and Ethereum Classic, for example, you have the old Ethereum from a chain from before, which can be sent and received, but those tokens actually mean something different from maybe the new Ethereum, and when you think about how this applies in the realm of an STO, I think actually that becomes a little less tricky because at least for many of the STOs at the moment, back to what Deven said, it's really about enforcement on what you are saying this token is tied to. So a common way right now is you have in the shareholder agreement some little carve out there. It says, okay, there's maybe 10% of our company is actually having an on-chain registry, and owners of those tokens represent a certain holdership of shares. So it is not as difficult because when it comes down to what that means, it's that in the court of law, if somebody's arguing over who owns these shares, they're going to point to tokens on some chain. And so what will need to be done is there will need to be a common set of documentation prior to the fork of which is the actual blockchain that we're going to recognize these shares on, and pick the blockchain or the fork that you want to go forward with. Where that does throw a little wrench in is actually more from the technical side, which is that in the case of blockchain forks, sometimes it results in people winding the chain backward, and then you have infrastructure issues where you thought you could have sent something, but actually you didn't. So you have problems with finality and counterparty risk at that point.
Well, thanks. I guess that means like you need a third trusted party to settle what's the difference between on-chain token and off-chain.
That's right. I think for a lot of security tokens, there is a trusted party, which is the courts and the company itself.
Got it. Okay, let's move on to the token liquidity. So hope Tim can answer the questions. I know like OKCoin probably right now does not have a security token license, ATS license, you cannot trade it. But I do understand that from your exchange perspective, it's going to create a huge business for you from a trading perspective. The question I want to ask you is, let's assume you have the license, but the STO is so successful, you're going to have 1 million tokens versus like, 20 today for you to trade it. So the question is, how are you going to do the due diligence? And how are you really going to list the token which is only have 1 million assets of the market cap on your exchange? If this token cannot be listed on exchange, how are they going to be traded? What's the value for them to issue that? So in that environment, do you see the ETF or a basket of token with the type of financial derivative product happen? Basically, what's your thought on how to solve the liquidity for those STO guys?
Wow, that's a loaded set of questions there.
Yeah. So you got to
first
keep
of all, there was a lot of presumptions there. Huge market, millions of trillions of STOs, unlimited possibilities, right? And I'm all for the ecosystem building this out. It is a nascent technology. Getting back to the ETC, ETH fork, one word that we kind of lost in the industry is experiment. In 2013, 2014, I think that word was more prevalent in conferences and in our industry, that Bitcoin is an experiment. We're still learning what it can do. We're still seeing how far it can go. And I think we're still in the very early years. So getting to the STOs, please do not tag me with saying this is a huge opportunity or trillions of dollars opportunity. I don't know. I do know that OKCoin plays in the convertible virtual currency space. That is a specifically defined term of FinCEN that came out with guidance in 2013. it still applies today. We do not have an ATS license, alternative trading system, nor a broker-dealer. We cannot deal with securities in the US, period. We would obviously love to, since the enthusiasm of this new budding space, and so we are working on it. But we'll see. I know there are great players in the space that have already gotten their ATS, broker-dealer license, and so we'll see where it comes out. As an exchange that is open for business, if you want to just bring in dollars and buy Bitcoin, we can help you today. We cannot help you with STOs, obviously. I hope I make that very clear. But we are excited about STOs. I'm not as excited about buying a piece of the Empire State Building, which is a fabulous marquee property in Manhattan. But I would love to see maybe entrepreneurs out there have a more community-oriented, better use case of an STO or a convertible virtual currency. I think that's what makes me more excited about this space. Actually, to think about the traditional space, I think the STO market would be a great tool for collateralized debt obligations. The CDOs that caused our great financial crisis. Back then, when it blew up, nobody knew who owned 1/1,000,000th of an CDO, sorry. And so with the blockchain, I think that technology can help map, consolidate, inventorize all the small exposures that are being cut up to small pieces. So I think that's a great use, and that's a use case. I'm just not in the CDO market, so I'm not going to do that. But I think there are smart people out there, whether Wall Street or Silicon Valley, and I think STOs will be a use case in 2019. I'm just ready and excited to see what the underlying use case is.
Interesting. So with that, also just a quick question on the ETF. Now, because ETF technically create a derivative product, it's being regulated, technically don't need to be traded on OKCoin, can be traded on traditional stock exchange. Would you think that's a good product offering that can help the whole liquidity of the STO? I know the Bitcoin ETF has not been approved, but do you think that's created more liquidity for more buyers to buy into the whole ecosystem?
You know, as an exchange, I think there are features of a traditional stock market type of exchange like Fidelity, Schwab, Wells Trade, TD Waterhouse trading account that actually, you know, certain customers would have more comfort and benefit from, to be honest. And so if that avenue is open for you all and the US investment category, I think it would bring in more liquidity and more demand. But savvy, smart people out there, I think they can actually get what they want today, right? You can buy a basket of cryptocurrency, or you can go through startups today, including Polymath, and get your security tokens or other avenues to get your security tokens. So I think it's a good thing. I don't think it's a critical need.
Okay, that's a very good assessment. Now talking about like getting money into the system, let's move on to Ben from BitGo. I know BitGo right now is providing custodian services basically to get institutional money on ramp to the ecosystem. You definitely mentioned that the current crypto exchange definitely, basically, I actually watched a presentation given by our CEO, Mike, talk about traditionally between buyer and seller, there are 8 blocks in the middle. That's how the current stock market work. But in the crypto, it's only one box in the middle, either OKCoin or Coinbase. Because of that, the institution will never going to touch this. That means the institution money will never going to be on ramp to the institution, to the exchange. So what's your perspective from BitGo perspective, how you got to solve that?
Right, okay, thanks, Henry. I think they're telling us that the time is up here. Yeah. So I just want to close by saying that at BitGo, we've always been there trying to solve problems to bring digital assets to the masses. And for us, we're looking at how we can go there and get regulatory compliance such that institutions can come into the space.
Yeah.
And we're learning a lot from them. So I think that what it's going to end up is maybe not 8 blocks between the buyer and the seller, fewer blocks than that. But there are a lot of lessons to be learned in how a security offering is being put up, in how custodianship is done, and how we can create assets and opportunities for everyone to come in a safe and in a manner that inspires trust and confidence.
Okay, thanks. So I'll give
Thank
you
you
the
very
time. I
much.
think we have started late. Maybe we can keep talking until they kick us out. So let's move to Joseph. I know, because the reason I want to ask you because Hong Kong recently passed some laws about the security exchange, the security offering. Can you give us a little bit the context of what really happens? And also, you from a casino, what's the kind of regulation environment to regulate your products similarly?
Yeah, because actually the times up actual screen here is actually sparkling. And I'll do a very quick one to wrap up on this one. I think when we talk about whether it is the STO or for the market or in Hong Kong, with the experience of Alpha Slot, is that we cannot just do it by ourselves. So now in the market, we want it to do the mass adoptions. But in order to have the mass adoptions to be successful, it needs to be top-down. Top-down meaning that we need to be part of the game with the regulators. Like, for example, Alpha Slot, we are dealing with the GSA, the Gaming Standard Association, to build up the blockchain standard into the gaming ecosystems. Similarly, for the financial-wise, in Hong Kong, now we have got the sandbox. The governments basically would like to see in the sandbox, people are experimenting the different ways to do the transactions and also for the regulated methods. And I think for us, for Alpha Slot and also for the university, we'll be part of it so that we build the game together with the regulators, then it will be a healthy ecosystem. So that is what I would like to wrap up. Otherwise, they are coming here to kick us out, I'm sure.
All right. Thank you. Let's give a round of applause to thank our panelists.
Thank you.
Thank you.
Start late.